Okay, so in this next section, I'm going to share with you what trading systems actually are and give you some concrete examples so you know exactly what I'm talking about. And these examples come from my own experience of trading, so that you can get a bit of an idea for how I approach some of my trading systems, and maybe you can use some of those ideas for yourself, but also so that you walk away from this section with a very clear understanding of what you need to have a complete trading system, so that when you go to evaluate an existing trading system, you know whether it's complete or not. Because whether you may not realize it, but a lot of the publications that are talking about trading systems are not actually complete. And if you use them in isolation, then you put yourself at huge financial risk because you don't have all of the components of a trading system. Okay, so what are trading systems? Basically, trading systems are complete sets of rules that tell you when to enter, how much to buy, and when to exit the market. Whether that's the stock market or the forex market or the futures market, doesn't matter. But it's a complete set of rules. And the idea is the rules define everything about your trading. And if your rules aren't defining everything about your trading, then subjectivity creeps in. And when subjectivity creeps in, emotion creeps in. And when emotion creeps in, mistakes and losses creep in, and you start losing money. So what's a simple example? Well, here's a very, very simple example. Now, I'm not proposing that you should use this. This is only going to be profitable in some markets, but just as an illustration, a very simple trend following system might look something like this. You might have a setup which says, okay, the stock or the instrument has to be moving up, so the close is greater than the 200-day moving average. When you enter, you want to set an initial stop loss. The stop loss stops you from losing too much money if you happen to be wrong. In this particular example, it's 2 times the average true range below your entry price. What's the entry trigger? Well, in this case, the entry trigger is it makes a new 3-day high. So it's taken a dip and then starts to move back up in the right direction. And then you're placing your stop loss 2 times the average true range below that entry price. And then the exit in this system is a trailing stop loss, where basically the exit follows the price up, and if the price drops and hits the trailing stop, then you get out. Very simplistic example of a trading system. But taking a basis like this, you can actually develop or refine it to create a system which is quite profitable and will work sustainably over decades, in fact. Because I've got systems like this, not with these parameters exactly, but systems like this that have performed very, very well for more than 10 years now. So what is a complete trading system? Well, as I showed you earlier in a previous section, the complete trading system has to have all components from the trading system framework. The main section of this is the core trading system components, which is the setup, the entry, the exit, if you have any pyramiding rules, the initial stop loss, and the portfolio risk management and position size. The setup is the conditions that need to be in place for you to place your trade. Typically, this is the trend, direction, the volatility of the stock, the nature of movement of the stock, the liquidity of the stock, and factors like that. It's everything that says, hey, this is a potential trading candidate. The entry trigger is the precise moment, the precise conditions under which you would enter that stock, buy that stock. The exit trigger are the rules which tell you when to get out. Now that could be a profit target, it could be a time target, it could be an indicator, it could be a trailing stop loss, it could be a whole range of different styles of exit. In the middle there, we've got pyramiding. Pyramiding is when you add to an existing position. So if you buy a stock and it moves in your favor and you choose to add additional contracts or additional shares to that position, then that would be pyramiding. And so your pyramiding rules are quite important. And then we've got the stop loss. The stop loss prevents you from losing too much money if you're wrong. Now, not every system has to have a stop loss, but you need to consciously make that decision with backtesting to know if the stop loss is going to help your system or not. The portfolio and risk management rules and the position size are the critical thing that keep you alive. And I'm going to cover that in a lot more detail in a later session. But, you know, in a lot of books and magazines, I'll see people talking about systems, and what they're really talking about is an entry and an exit rule. They're not talking about the holistic trading system. And so when we're looking at existing trading systems to test, we need to make sure we understand what all of the components are. And if they're missing, then we're going to need to supplement them, or throw that system idea away and try and find another one. So these are the core components that you really need to make sure. And as I say, there's a bunch of other components around this. I teach all of these in detail in the Enlightened Stock Trader Certification Program, so I'm not going to go into them all in this program. But you do need to understand the strategy you're trading, the markets you're trading, and the time frame, and I will cover that in a later session. So what's an example of a complete trading system using this framework? Well, I've got one here, and I've explained it in words. Now, one lesson that I want to share with you is that a lot of traders jump way too quickly to indicators and calculations and math. The risk when you do that is you're going for the answer, the conclusion, before you've explained what you're really trying to achieve. When I'm working with my students and coaching them, what I try and get you to do is explain in plain English what you're trying to achieve, so that we can convert that to indicators or rules or analytics in the simplest, most effective way possible. But if you don't explain in English what you're trying to achieve, it's very hard to get the right rule. Too many people just throw indicators at their software hoping that something will stick, but you end up with a Frankenstein monster of a trading system that just doesn't work. So let's give some concrete examples. So time frame, I'm going to start at the bottom left and work my way around clockwise. Time frame, I'm going to use the daily charts because it gives me the lifestyle that I want. I only want to trade 30 to 60 minutes a day. Now, I drew this picture a while ago. I only take about between 5 and 15 minutes a day to do my trading and manage a pretty substantial portfolio with just up to 15 minutes a day. Very rarely now do I have to spend much more time than that. And so that's what you've got to look forward to when you get the systematic trading approach right. Now, markets, I'm going to trade the stock market because it's simple, there's large trends, and they're highly profitable. I like to trade large trends. That's my thing. That's my style, and the stock market really gives me that. There's other ways to trade the stock market, of course, but I'm going to trade the stock market because that's what I like with this system. Now, when I choose what stock market, that choice becomes really important, and I'll cover that when we talk about the T6 trader profile and your personality and your objectives and your lifestyle. But you need to choose a market that you will actually be able to trade. Living in Australia down under, trading US stock market from a lifestyle perspective is just terrible. And so I don't trade US stocks very much. I have systematically traded US stocks in the past, but I gave it away because I value my lifestyle too much. I just don't want to have to stay up late at night to place my trades. So as a result, I trade markets in my time zone, and you can do the same thing. So don't fall victim to that trap that you have to trade a certain market because, that's where everyone else is. Just not true. You can make money in just about any stock market. Okay, what strategy is this system going to follow? This system is a trend following strategy because I want to catch large long-term trends. The setup, I'll enter trades that are only in a strong trend that's been going for at least a month or more. So it's a really significant trend that's moving, and I'm going to jump into that. The entry for this system is I'll enter after a small dip against the main trend because that gives me a lower risk entry point. Pyramiding, I'm not going to add to my existing positions because I want to minimize stock specific risk. If I take one position and add another position in the same stock, then I've doubled my risk, and I want to keep that low and maximize my diversification. So I'm going to avoid pyramiding for this particular system. What exits? The exits are going to be when the primary trend is obviously over. So it's a very long-term exit, and when the stock moves from a bull trend to a bear trend, then I'm going to get out. Stop loss, a tight initial stop loss, relatively tight, based on recent price movements to keep the losses small. So this system is a trend trading system, and it's trying to capture large wins and small losses. And so the small losses, you realize by having a stop loss that's placed just below your entry point. Position sizing, keep risk very small. A lot of literature out there will say risk less than 2% per trade. But in my experience, and when you get into the back testing, you'll see 2% is way too much for most systems. And so I'm risking far less than that on this system, more like 0.5% or just a bit under 0.5% risk per trade. Monitoring, I review the system performance every 3 months to make sure that it's still stable and performing within the bounds of what I expect. and I'm going to periodically re-optimize and check my parameters every 12 months or so to make sure that it's still profitable and I've still got the sweet spot. That's sufficient for a long-term system. For a short-term system, you would do that periodic re-optimization more often. And then for personal psychology, on a daily basis, I check in and make sure I'm fit to trade. If anything's happening in my life that's going to prevent me from making good trading decisions, then I need to know that, and I need to suspend my trading. So that's an example of a complete trading system. So when you're looking at an existing trading system in a book or on a website or in a magazine, have these examples in mind so that you know what the gaps are in that system you're about to evaluate, and you can supplement those gaps and close them so you can maintain good trading performance. Make sense? Great. Okay. So why should you use trading systems? We've covered a lot of this already, but there's a few things I really wanted to call out. The first one is, for most people, trading systems are going to increase profitability because most methods out there just don't work. Most indicators have completely no predictive power. And a lot of the approaches that people are using to make trading decisions are just not profitable. But when you've got a profitable back-tested trading system, you can't help but do better. So for the vast majority of people, implementing a trading system will improve profitability. It also, as I said earlier, eliminates emotion because the rules tell you when to buy, when to sell, and how much to buy. What that means is whatever else is happening in your life no longer affects you. You can just follow the system, because you're not making those judgment calls under pressure. The system is doing that work for you. Now, you may be placing those trades manually. That's fine. I place my trades manually. I'm not fully automated. But the decision is driven by the rules in the system. It's not driven by me and my emotional state. If it was left to me, I would never make money because, I'm so emotional. The next step is the enforcing of consistency, because if you've got rules that are defining what you're buying and what you're selling in the same way every time, each trade is going to be based on those same rules. It's not subject to your interpretation of the indicator or the chart pattern on that day. It's about its consistency, and eliminating inconsistency, eliminating variability is one of the big challenges that new traders face, because if you're making decisions inconsistently, you're not going to be profiting consistently, and trading systems force consistency. They also increase confidence because you've back tested it. And if you've back tested it, you know that it works and it makes money. And if you know that it makes money, you can follow the rules even if it doesn't feel good. And then finally, it reduces the time. As I said, when I first started trading and I was doing it technically, I was taking 3 to 4 hours a day to look at all my charts and make my trading decisions. But now with a systematic approach, it takes me around 15 minutes a day or less most days. So my trading is really an instrument of freedom for me, because I sit down, I do my trading, and then the rest of the day is mine. And I make my money in 10 or 15 minutes, and that's it. So that's why I believe that trading systems are the most effective way for most traders to trade.